Thanks for coming, everybody. Just a quick note from our sponsors. We're going to do between every of the sessions technical analysis of stocks and commodities. We're incremental in helping us getting this going, and have been great sponsors. For registering, as long as you did the little check mark, you're going to get a free copy of the magazine today. Also, one of the things is if you sign up for any of the services today, you're going to receive 5 months of a subscription as part of just signing up for any of the services that any of our great presenters are offering. In addition to that, if you spend $300 or more, you're actually going to get 2 years for free. Stocks and Commodities is, again, one of my favorite magazines, and gosh, there's 100. As part of your membership, you're going to get access to every article they've done. So very, very good thing. While we're on the topic, a lot of people were asking, how do I get a copy of MetaStock? We have been rated #1 by Stocks and Commodities now 24 straight years. So you'll get a free trial if you go to traders-metastock.com/traders-summit with an extra T on the end, Traders Summit T for trial. That'll take you to a sign-up page. Moving on to our next presenter, Rob Hoffman is another person that we're kind of doing a lot of business. He came down to our users conference in Vegas this last month, and was able to kind of see him speak live. Rob's great. He just won another international trading competition, and I think he's in Paris, if I'm not mistaken, right now to kind of deliver the next talk. Absolutely a fantastic trader. I did learn that he is, at one point, was a police officer, which I thought was interesting. And with that kind of an introduction, definitely one of the best part of my jobs is actually working with these people that are industry experts, and Rob is definitely someone we're always happy to have at our sessions. So I'm going to go ahead and change the role over to him. Rob, if we can get you in here and just make sure the audio is working.
Okay, gang. Well, good morning, good morning, good morning. Hopefully everybody can see my charts and hear me okay.
You're coming through now, Rob.
Outstanding. Great. Well,
so,
good. Well,
where are you at right
ahead,
now? Was it Paris, or did I get that wrong?
No, I'm in London.
Okay.
In fact, I went ahead and I've been doing the last couple of days. I was one of the main featured speakers here in London, and so I've been actually doing numerous presentations as well as live trading events. So I started off Thursday evening at one of the universities here, then came over Friday, did some live trading with everybody, showing my stuff in action right there live. And it was originally supposed to be a trading competition, but they couldn't find anybody to trade against me, so we went ahead and just made it kind of an educational event. And then did 2 more presentations this morning over here, and so then I raced back to my hotel, Jeff, to get to you guys. So kind of a busy couple days.
Well, thanks for making the time to get over here. I'm going to let you go ahead and get going. I know you got a lot to go through.
Great. Yeah, we sure do. So let's go ahead and get right into it, gang. The only thing I'll say, I'm going to go ahead and go through the whole presentation. I won't have any offer or anything for you. I'm not going to be selling anything to you today. I'm not going to be offering anything. I believe MetaStock gave you guys an opportunity to come hang out with me live in my live trading room. And Jeff, you may have a link for that. So what we're going to be talking about today is one of the trading strategies I've used to win trading challenges. And as I mentioned, I've got nothing here to offer or sell you today. The only thing is at the end, I think Jeff's going to probably pop up a link again or so, or you guys may have already filled it out before, giving you an opportunity to come hang out with me in my live trading room. I'm currently here in London. Just got done with multiple days of speaking, and so now I'm coming over here to you guys, and then I'm going to jump on a plane back to the United States. So let's go ahead and take a look at a couple of things here this morning. As we go ahead and look, I just want to remind people we're going to be talking about profit and loss, and trading involves risk, not just reward, so I want to make sure that everybody understands that. And one other point, I'm going to be on a laptop here today, so I will have to flip back and forth as far as answering questions. So let's try to get through a couple things together first, and then we'll get back on track there as far as looking at Q&A. Normally I do like to do the Q&A live in real time, but I'm going to have to kind of pop back and forth. So we'll do the best we can with that. But I'm not, like I said, I'm in London, not back home, so use a little bit different setup today. Okay, so bear with me on that. So with that being said, as we take a look here, I want to thank you guys for being here. I definitely want to thank you after that little interruption for all of you took the effort to get back in here with me. Okay. First things before we get going here, I do want to go ahead and brag about my little girl. She's 10 weeks old now, so I'm really excited. She's going to be changing the way I do things with you guys going forward a little bit. Last year I did a lot of travel, and of course I'm still doing travel right now here in London, but I'll be slowing down a little bit into the new year, focusing on just some of the more bigger venues and bigger events and stuff like that. So then that's my lovely wife with my beautiful daughter. So of course I'm extremely biased and very proud of these two wonderful ladies. As we go ahead and get on my website's Become a Better Trader. You guys are welcome to look around there, get access to my free nightly videos, and you just go to the front page of the website and sign up for that, if you see fit there. As far as the a couple other things to know. I do a lot of these presentations for the big events, big shows. MetaStock, as they mentioned, was kind enough to have me at the last 2 years worth of their annual events, and that's not something they do. They don't normally invite people back to those, but due to a lot of you here and your request, I was back there again for a second year in a row, which was great. So today, we're going to give you a lot of that great information. Now, you heard Jeff talk about me being a police officer. I certainly was many years ago. So the difference between me and a lot of other people that currently have second careers is just that I didn't quit. I kept working at it, made all the mistakes you could possibly make and kind of came out the other end. So I encourage people to try to persevere and, see if some of these things I'm going to help you with today, maybe some of those things that you've been needing in your, trading journey. This is my book collection. A lot of this stuff I could affectionately say that I would burn in the next polar vortex if I ran out of heat. A lot of it's a sales material or something, or frankly, even just great material here like this, how to read the Wall Street Journal, doesn't really do a lot in the real world to help you become a better trader. Great book, general information, but it's not going to help you reach that new level of achievement in your trading. Okay, so we're going to kind of focus on those things. And the real reason why you're all here today is because of this screen right here. We've gone ahead and won numerous domestic and international live, real money only trading competitions. And so what I'm going to do is the trade I'm going to share with you today was directly involved with helping me last year specifically. Pretty much all the trades I did last year, but even some of the trades this year at key points, this trade setup that I'm going to share with you helped me out a great deal. And so we're going to go ahead and share that with you. And it's funny because right as I was racing out the door, it took me a long time to get out the door from the London show day, but a prop trader came up to me, which is kind of unusual because most of the time the prop traders, they go to my events and I'll see that they're from a certain firm and stuff, but they won't say anything. They don't want anybody even knowing, especially their colleagues, that they're coming and getting information elsewhere. They just want to look really smart. And this guy came up to me, a really nice guy, and was explaining how much he's learned from me and how much it's helped him, and some of the members in his firm, which I thought was pretty cool. So whether you're a retail trader, whether you're an institutional trader working at a prop firm, there's a lot of opportunity to benefit from these different things. And of course, these are strategies I'm using in the real world in my actual trading here. Okay, so with that being said, let's just talk for a few minutes about what these trading competitions are before we get into the setup and why this is such an important strategy to me. So this was 2012. You can see the traders kind of lined up across the board from 16 different countries around the world, representing their different countries, and pretty cool. This is 2013. Very intense conversation. You can competition. You can see a lot of hands and head there, so a lot of us having hands and mouth, right? In that territory. Very intense competitions. Everybody starts out with 50,000 euros, real money in a certified account there, and and then you're battling it out over the course of 12 hours. And this was this year, and you can see some of these guys really came ready to do battle. You know, like this gentleman here brought multiple screens with him. Several of the traders actually brought, you see this guy brought this big TV, look at this one over here, brought this big TV on top of all of his other computers, right? So some of these guys were using 2, 3 plus screens, and I'm just using my one laptop, right? Because in the end, in fact, you can see my charts back here. In the end, same things you see me use each and every day, the simpler it is in many ways, the better. Okay, and that's why I'm going to teach you something you guys can walk away with today as part of that. So here's another screenshot of this. I was also proud of this competition as well. One of my students from Greece actually placed 4th in this competition. He's a money manager from Greece, and he actually placed 4th in this competition, and very well deserved this year. So very proud of him. This is what happens when you get down to the final rounds of the competition. You get multiple judges standing over you, and of course it's very intense. You got an audience full of people. You got all the judges, including the head one. You know, standing there, you know, talking to you constantly, having to, you know, their voice in your ear, asking if you're trading, thinking about trading, because they document, record everything on these screens in the backdrop here. Okay, so as we go ahead and we take a look, let's move this down. I'm using a little different drawing tool today, gang, so bear with me. Fortunately, I was able to win again, as we talked about. Let's just take a look before we start the strategy. Look at how we did the last 3 years at that international trading competition. So in 2012, I grossed about $3,992.50 over the course of the 4 rounds. Again, that was 12 hours, and it was about 6 hours of actual trading time. This setup that I share with you tonight helped me out a little bit in that particular competition. But this competition last year, the first round was actually canceled. So the first round went from 16 traders down to 4 traders. This round actually, so we only had 3 rounds instead of 4 there. So I grossed about $2,400 last year. But you're going to see several of the trades that I took here today, and you'll see that on MetaStock charts. And then this year, this was September 19th of this year, and what you'll notice a little bit difference here, I grossed about $4,837 over the course of 18 trades over the 6 hours. And again, those are all live, real money trading competition trades. I always like to share that with people, because like here yesterday in London, I don't know if you guys can believe this, but it's true. I was the only person doing live trading at the entire show. I'm the only person, and so my classrooms just kept getting bigger and bigger and bigger. I had the university, then I had the live trading yesterday, Friday, and then I had the 2 presentations today, and they just kept moving to bigger and bigger and bigger rooms because more and more people are following on. I was the only guy who actually wasn't just teaching off a PowerPoint. I was live trading, and I do that with you today if we had the markets open up. So this year went ahead and traded DAX, and then we went ahead and also traded crude oil. But you'll notice here the biggest amount of money was actually made during the U.S. stock market, because if you go back to September 19th of this year, you will see, in fact, you will see several examples of the setup that I'm about to show you today. And so the market just kept going down, down, down. So go back to your MetaStock charts there and take a look at September 19th on an intraday basis, and you will see that thing was just in a death spiral. So I kept shorting using strategies just like the one I'm about to show you here in just a moment. So pretty cool stuff, and that's why you guys are here, because a lot of people talk about trading, very few people do it live. And of course, even less people, of course, win international competition. So it's pretty cool stuff. And so with that being said, I've got lots of different trading strategies, as you can see here. The one we're going to focus on today is going to be the Hoffman inventory retracement trade. This was recently featured in the international trading magazine called Traders Magazine, and so it was recently featured there. And very exciting trade of mine. mine that I use frequently. Helped me win the international trading competition, as we talked about last year. And also helped me win, like at the New York Traders Expo last year as well. And then it also helped me, again, it was part of the trading strategies I used in the big sell-off in the stock index futures back in this year's trading competition. So with that said, let's go ahead and get into the strategy itself. I'm just going to take a quick sneak peek at questions here, guys. I don't know if you guys can see the questions box here that I'm popping up on the screen. I don't know if that's coming up or bugging you guys or in your way. I just wanted to kind of come up for air real quick. Okay, so it's not disturbing you guys. Great. So I just want to be able to pop that up occasionally and be able to answer questions. Okay. Yeah. Thanks. Those of you who are commenting, I see now on my family. I'm really awesome. I'm really excited and got a great family. I'm very proud of obviously them. So they keep me going. So with that being said, let's go through the rules here. So the inventory retracement bar trade. What is this trade? It's a price action based breakout trade. Okay, and when do we now I want to clarify something, because you see the word breakout, right? You see the word breakout here, but I want to be careful, because actually what this trade is, it's a continuation trade. It's a continuation trade. So and you'll see what I mean by that, because I'm a trend trader. I like to trade with the trend. All right, so I just want you to understand the word breakout, because most breakout traders fail at breaking out. This is a very specific kind of trade used with institutional, identifying institutional trading activity, and then I'm looking for trend resumption within that. For those of you that are longer-term investors, because I use this not just on an intraday basis, that's kind of my claim to fame, winning all these domestic and international real money competitions around the world. That's kind of my claim to fame. But really, for any of you that get my professional nightly videos, my day trading and my premium swing trading video, you know that those premium swing trading videos, I do a pretty darn good job in those, frankly, and provide some really great information that my institutional clients like to get their hands on. So so we use this there as well. And then for those of you that are long-term investors, what you can do is use some of a strategy like this to identify areas where, because a lot of you that are long-term investors, what you've done, you've bought a stock and then you sat on that stock potentially for weeks, months, or potentially even years, certainly months at a minimum, where you sat on dead money waiting for everybody else to discover this great fundamental play that you found. So what you can do is identify these trades, put them on a hit list, and then wait for a setup like this, for instance, might keep you from sitting on dead money any longer than necessary. So it's even great from that perspective. And of course, if you're an options trader, well, guess what? All you're doing is analyzing the underlying instrument, and if you see this strategy take place, which we'll take a look at stocks that you can then think about from an options perspective in just a little bit, very, very beneficial there as well. So with that being said, the strategy here is this. We're looking back over the last 20 bars, okay, and we're looking for these bars where within the last 20 bars that we see bars that are 45% or more off their high in an uptrend, or 45% or more off their low in a downtrend. So what you're basically asking yourself is, how much wick is showing? Is it approximately 45% or more? So before we get into the other key parts of this, let's take a look at what we're referring to there. Because no matter how many times people have watched this presentation, they always seem to learn something new from the discussion points in it. And so if you've seen this before, well, guess what? I'm still using it, still winning trading competitions around the world with it. So you just can't learn enough about a setup like this. So what we're looking for is in a downtrend. In a downtrend, we are looking for bars that are coming 45% or more off their low, or off the low. So we're taking the high to the low and asking ourselves, is it 45% or more wick? And as you can see here, this first bar, I think we'd all agree, is 45% or more off the low, isn't it, gang? Can everybody see that clearly? So from, you got the low here, the high here, and then 45% is, right in this area approximately, right? So we can see we're clearly well off that. Well, how about the other three here? So here's your low, here's your high, and that's right about the midpoint of the bar, so we are definitely 45% or more off the low. Same thing here. Here's your low, here's your high. Are we 45% or more? We are. We're about 50% off the low, aren't we? And then finally here, here's your low, here's your high. Are we 45% or more off that low? That's what we're looking for in a downtrend, okay? In an uptrend, it's just the opposite. In an uptrend, we are looking for bars that are from the high to the low that are 45% or more off their high. And is this one 45% or more off its high? Yeah, it's about 50% off the high. And one other thing you'll notice, whether they're green bodies or red bodies is completely irrelevant. All I want to know is it 45% or more off the high? The reason why I'm looking for this is I'm looking for institutional activity, okay? Because ask yourself, let's pretend for a moment that this was Apple on a daily or a weekly chart. Let me ask you, gang, if the market's been going down, 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 and then all of a sudden Apple stops going down, stops in its tracks, and actually starts pile driving back to the upside, is that you and me out there, the average retail trader, is that you and me causing that to happen, or is that institutional in nature? It's clearly institutional, absolutely. It's definitely not here. No, it's you me. I see there was a question about the account size. So you probably for the trading competition, Edward, the trading competition was 50,000 euros. So it's about 65,000 US dollars approximately, based on the exchange rate at that time. Everybody starts with the same. They have to bring in their brokerage statement showing that that's exactly what they have in their account. So it's a very highly regulated real money event. Okay, so as we go ahead and we take a look here, that's why I'm trying to identify bars like this. I want to see where in this uptrend the market stopped and then was driven back down, because that shows me that one or more institutions, either they're starting to take short positions or they're thinking that we've reached a fair value area and now they're starting to sell off those positions. So what I'm looking for then, my entry on this is going to be 1 tick or 1 cent above the high of this bar. So what I want this to do, I want the market to come down. I want it to come back up here, and now I want to break above this level. I want you to show me that that inventory from that one or more institutions is no longer there, and now this market is free to continue on the correct direction. Okay, that's what I'm looking for in that situation. All right, let's go ahead and go back to the rules here then, and continue to follow through with the additional rules. So with that being said, here we go. Where's the entry? We just talked about that. 1 cent above or below that signal bar that's created there. All right. Where is my exit? Well, the exit's going to be trailing stop, and I'm sure I'll have time here. I know we started a little bit late because the webinar was shut down earlier by the other guests. So what we're going to do is we're going to just try to make up some time, though, and still get that in there for you, because I want to show you how we look at trailing stops. That's profit stops. Stop losses are actually 1 tick on the opposite side of the signal bar. So 1 tick or 1 cent below the low or the high of the signal bar, or a predetermined loss value. So what do we mean by that? So what happens is this. If I go ahead and, so the market's going down. Now it comes back 45% or more off of the low here, okay? And then it rolls back over. Well, now I'm looking to short 1 tick below or 1 cent below, depending on the instrument I'm trading, right here. Well, my stop loss will be 1 tick above the high of this bar. So that will be my stop loss up here. Well, so the thing is, so where does the predetermined stop loss come into play? Why would I maybe consider that instead? Well, what if this was a weekly chart of Apple, let's say, back when it was a $600 stock, and this bar is like a $30 bar? You may not want to risk $30 on that trade. You may be, even though it's a swing trade and it's a $600 stock, maybe you only want to risk $10 or $15. So you may say, well, look, I know because one of the dirty little secrets with this trade is typically we expect it to actually stop by the midpoint if it does go back up and then start to roll over and go through. It shouldn't even get to this level up here. Maybe I'll give this $10 of wiggle room or $15 of wiggle room, whatever the case may be. So that's why you may choose a predetermined loss value rather than just using the opposite side of the signal bar. But the official intent of this is actually, so like let's say this is an intraday chart of a 5-minute chart pattern. All of a sudden the market, it pushes up, it comes back. Well, remember, we're in an uptrend, so I want this to go back up here, break above the high of this bar, and then I'm looking to go long. And then the stop loss would be one tick down below the low there, okay? So that's how we look at the stop losses, all right? Let me just take a quick look for questions. And, all right, so go ahead, okay, so, Nina said, isn't the stop loss too tight? Sorry, wrong question. Okay. So maybe she got the question already answered. Yeah, the stop loss is not too tight there from my perspective because typically when these break through, we're expecting them to move pretty fast, and I'm going to show you that in just a few minutes. John asked, what time frame do you trade? The question is all time frames basically. Primarily when in my live trading room, people watch me take trades off the 2-minute, 5-minute, 15-minute charts, right? We have the morning trading session together, so that's what I'm focusing on. For my swing trades, options trades, those are clearly focused more on daily and weekly charts. So I use this on different time frames, and I did mention that a little bit earlier, but I'll try to recap that again in just a moment. Okay, and so let's go ahead, and we just talked about stops. And somebody's not getting sound, so they may have to log back out, log back in. Okay, and so let's go ahead and do this. I'm going to actually keep on going here because I can tell that we started a little bit late. I'm going to try to keep it on track for respect for the other traders, or other speakers that were coming after me. Through no fault of their own. We don't want to push everybody out. So what I'm going to do is just keep on going here because somebody's question I can see will be answered as we go along. So we talked about the stop, the entry, the exit, how we identify the bars. I want you to think about the concept here of rocket fuel. If it's moved a large range quickly, it's likely to fail. Well, what are we talking about there? We're talking about this right over here. What happens is this. If we go ahead and move, the bar spikes down here, gets driven all the way back up here. Well, if all of a sudden this next bar comes all the way back down here again, well, now it's got to break below there, and then I've got to go ahead and keep on making my profit, right? Well, so it may exhaust itself. It may run out of rocket fuel to the downside because it's got to move all the way back here just to trigger the signal. Then it's got to continue on. So I don't generally like bars like this. What I prefer for them to do, instead of coming all the way back down, exhausting itself there, in a situation like that, I want it to start working its way back down where over the next several bars, it starts trying to break back down below there, but not come right back down with one big red bar. If it does come down with one big red bar, it's far more likely to fail. Okay, so make sure you understand that, because if it comes from way up here, way down here with one big red bar, it's more likely to stop here, bounce off this level, okay, at least in the short term, before rolling back over. Well, you may get stopped out, especially if you have like the midpoint of this range as a stop out. You may potentially get stopped out before it actually rolls back over. So I prefer these kind of bars over here versus this kind of bar right over here. Okay, so hopefully everybody got that, because that's one of those important little ahas. All right. Now, it also has diverse applications for different instruments and time frames. I'm going to show you Apple on a daily, weekly chart here in a minute. Then I'm going to show you intraday trades I actually took during the trading competition. It doesn't matter. It's whether you trade options, stocks, futures. It's all the same thing here, as I'll show you in just a moment. Remember to trail your entries to reduce the risk of reversion to the mean. That's what RTM is there. And also trade in the direction of the BBT Pro Trader Pack. That is available for MetaStock. But if you don't have that, just as a basic alternative, just to start the process here, you can use a 45-degree angled 20-period exponential moving average just to start the process. Obviously, my indicators make it much more accurate, get you into a lot more trades and stuff like that. But for the purpose of you guys being able to walk away, as I said, I'm not going to be selling anything to you guys today. I'm sure you'll get offers from lots of people today and everything. So, but me, I just spent the last 3 days here showing everybody, these international trading championship style award-winning strategies and doing it live. I'm quite content with that. And so my thought for you today, I'm just going to show you exactly what I do and how I've been winning this stuff. Okay. And it's also something I use in my trading room as well. So now, as we get ready to show you examples and talk further about this, what I want you to understand is that in a downtrend, we're looking for 45% or more off the low. In an uptrend, we're looking for 45% or more off the highs. Okay, and let me get the other tool on there. There we go. So uptrend, 45% or more off the highs. That's the first thing you need to understand. Let's go look at some examples here. So this is Apple. All right, and this will address a question that I saw a little bit ago as well. That's why I started seeing questions of things that will be answered in just a few minutes, and that's why I want to get right into it so we don't stall out people that have watched this presentation before and learning new things. I always like to show something new and stuff like that in this because it's really important. Since it's a primary money-making trade for me. And so right now, as we take a look at Apple, this was a weekly chart of Apple. This was a daily chart of Apple, okay? And this is actually one that I mentioned in my free nightly video newsletters back when it was happening. In fact, recently I was now I'm on the opposite side of the spectrum. If you guys watch my free nightly videos, you recall I looked for Apple to be a buy, in my opinion, above 104 with a target of 110. How many of you actually saw that? How many of you follow my nightly videos and actually saw me put that out here? It was just in the last week and a half. You actually saw I said that. I said 104 long, Apple, 110 for the target. Okay, awesome. That makes me feel happy. Good. All right. All right. Good deal. Fantastic. So let's go ahead and moving back over here then, as we take a look here what we're focusing on now is we get the downtrend. So you see that 20-period black exponential moving average there. Now, gang, if you use a 19 or you use a 21-period exponential moving average, listen, that is perfectly fine. What I'm looking for here, though, is I'm kind of looking for that angle of attack to the downside. Then what I'm looking for is the bar that comes 45% or more off the low, right? In a downtrend, that's what I'm looking for. So you can see this bar. Can everybody see the 45% off the low here on this bar? Now, notice what happens here. It now pops up from the next for the next several weeks, and then look what happens when it gets back down to this area. Okay, when it gets back down to this area, it stalls out there and hangs there for 2 more weeks. Why did it do that? Why did it go ahead and stop at that level where we originally had this signal bar? Who can tell me? Excellent. Very, very, very good. Very good. Okay. And so the reason why, as so many of you got here, because there was still inventory there. There was still inventory there, so it was still support. Great job, gang. Great job. Okay. So what am I looking for? What did we say the key that we're looking for here is? We said that the key that we're looking for here is what? We are then looking for us to trade below that level, right? We want to get below this level. Watch what happened. We were in a downtrend. We got below that level, and look what happened afterwards. It whooshed to the downside. It dropped about $40 from that point. Okay. It dropped quite a bit there. Dropped quite a bit in the next week. Okay. So that's what we're really talking about. We're looking for, over the course of that bar, we short down one tick, 1 cent below that, and then the market pushes down. And then that's when we start trailing. I'm going to show you how to trail in just a few minutes. Now, right over here, then you can see more examples of this. Let's go ahead and take a look at that. So right over here, you can see 2 more examples of bars, about 40%, there's 45% off the low, and right here, 45% off the low. Right here, 45% off the low. You'll notice that when we broke down below each of those different levels, this market continued to go ahead and sell off. Now what's interesting is we talk about these markets working in different time frames. This time frame over here, this is the daily time frame. This right here coincided with this right over in this area right over here. So I was mentioning right here at this time in this that we wanted to break down below these key levels, okay? And so the reason why I'd like to point this one out, it's a great chart I share with my institutional clients. It's something I actually shown for free in my free nightly videos as well as it was happening. So it's great to have that validation out there. So what we had was this was in a downtrend. We had the 45% off the low, and then we looked for the breakdown below my level. Notice what happened, gang. Notice how it stayed above for the next couple of days. Okay, it stayed above my level initially, and then when it broke down below, it broke down really violently, and you can see it dropped from around the 430 level down here, even what we can see on the screen, 395. So it dropped about $35 over the next 6 or 7 trading days right there. So you can see what happens when you get these areas where one or more institutions stops the market from going down, and then we trade along that level for the next several days, next several 2-minute bars, next several weeks. Once that institutional buying, in this case in a downtrend, is dried up, the market's free to resume the initial trend. Does that make sense? That's why, from our perspective, we consider this a trend continuation trade, not really just a breakout trade, because we're taking this trade with the original trend. Okay, but can everybody see how once we broke down below these different levels here, this market really accelerated to the downside in all cases here? Is that coming across clear for you guys? Yes, Stefan. Yep, and a lot of my currencies traders use the hourly 120-minute, 240-minute charts. Yeah. Okay. Excellent. Did I lose anybody on that? Because it's important that you see that. So we have a downtrend. So in a downtrend, I want to go ahead and, well, you don't know. So Nina asks, how much do you determine it's going to fall? What I do is I focus on key support and key resistance levels. And you're going to see that in a minute when I talk to you about trailing, Nina. So I focus on key support and key resistance levels. All right? So let's go ahead and take a look at, in fact, let's move this forward and see if we can actually get to that section here after we clear off the drawings here. Using a little different drawing tool today because I just got the one screen for the laptop game. So here's my trailing stop methodology, okay? So once a trade is taken, right, what happens is I identify key support or resistance levels. For instance, like on Apple there, when Apple was falling down towards $400 at that time, that to me was a key support level, right? A $400, $500, $600 level. What level was recently important to me in Apple? When we were $100 was really important to me, and then $110. So first of all, I was looking for us to break $100. Then we got up to the 104. Well, once we broke 104, I was looking for the move to 110 because that was the next major level above. We came right to that, and I told you in the free nightly videos that we've been looking to focus on taking profits from my perspective. So what I'm looking for is key daily, weekly, monthly pivot points, key round number levels, like in my euro currency trading, for instance, the round numbers $1.23, $1.24, $1.25, $1.26. Those round numbers are all really key important levels. So if I'm in a trade, what I'm doing is I'm identifying where those key levels are. All right, and in this case, like this was a big pivot level that was on my mind here. So the trade is taken. And then as we're getting up here, initially, I trailed about 50% of profit earned. But as we get closer to the resistance, watch what happens here, okay? Because that's where my projected target is, Nina. But watch what happens here. As we get up closer, now I'm going to go ahead and move this up to about 80% of profit earned. Okay, why? Well, because as we get closer to those major pivots, we may just stop, especially when the market's been kind of going parabolic here, right? We're far more likely to fail at a resistance level like that. So with that said, then what I do is as we get right to the price level, now I've moved up to 90% of the profit. All right, and then I'm letting it sit there for a second, see if it might break through. 1 out of 10, 1 out of 20, 1 out of 10, 1 out of 12 times, we might go ahead and actually push through, but it doesn't happen that often, and frankly, usually it'll just pop through a little bit and then roll right back over, right? Because what's more likely to happen, gang, when you've been going up and up and up and up, and now you hit a major resistance level, is it more likely just to break through and keep on going, or is it more likely to roll over? What's more likely to happen statistically speaking?
Yeah, see if you can.
Okay, so it looks like we now have some of the other speakers who've turned their microphones on. Gang, I'm going to go ahead and mute them real quick. All right, so hopefully you're not hearing anybody else but me anymore. Seems like we're having a tough time today with other speakers keeping their microphones on or shutting the webinar down. So hopefully you guys can only hear me now. And good, it's okay, excellent. Oh, that's perfectly fine with me, Sam. So as we're going ahead and taking a look at this here, I hope this makes a lot of sense. We're looking yeah, thanks, gang. I did the best I could to manage through that. So Sam seems to be the only one that's okay with all that. So as we go ahead and we take a look, what we're doing here is the key is we're more likely to go down, as you guys appropriately pointed out. And so what I want to do is at that point when we don't break through that level, then I just want to kill it up. Okay, I just want to kill it. I want to take the trade. I want to move the profit right underneath because it's only 1 out of 10 times, 1 out of 12 times it's going to do this. You know what I'm saying? And it's going to have a little bit more of a pop-up, and then I'll quickly trail it up underneath. But that's my goal. Identify. So, Nina, does that make sense for you, dear? What I'm doing is I get into the trade. Initially, I'm trailing about 50%, and then as we get near that key support or resistance level, I'm looking to trail it up. All right. So, hope that makes a lot of sense. And this is really a really important trading strategy here. Again, we go ahead and use this to win trading competitions around the world. And like I said, it was directly responsible for helping me with this trading competition here not too long ago. And that's what's important. That's why I want you guys to understand. It was almost all my trades but one in 2013 were actually this trade that I just shared with you. And so and then even this year with that, you saw with the big sell-off in the U.S. stock market, it was one of two primary strategies I focused on during that time. And Dina, you're absolutely welcome. Like I said, we got some great people asking great questions here. So as we go ahead and take a look, Edward, let's see. Why do you always use the 45% and how do you write this as a percentage? Because to me, 45% or more is really significant. Seeing it bounce off a low or a high, so like right here, if it bounces off just 10% off that high, to me that's not as significant. It takes a lot more energy to stop it here and actually drive it down 45, 50%. Than it does to just push it down 10%. So 10% might be a little bit more noise to me. 45% is a little bit more significant. So that's why I tend to use that in my trading. Now, Edward, I do see people that tend to, or will manipulate those numbers because, of course, people are always looking for more and more and more trades. And so they twist things different ways to meet their trading style to get the extra trades they're looking for. So, for instance, like I like a 45-degree angle 20-period exponential moving average, okay, and of course I like my other indicators firing off and such. Well, what will happen is some of my systems programmers will start to do this at a 40-degree angle, then they'll still get trades, so then they'll move it to a 35-degree angle, then they'll move it to a 30-degree angle. So what happens is more and more and more people will and that's fine. JC, if you want to just use 50% for your calculation, you're more than welcome to. In fact, the slide used to say, JC, truth be told, it used to say 45 to 50%. Okay, so so you're very welcome to use 50% if that makes it easier for you. That's fine. For me though, I'm willing to go down to about 45%. Okay, so let's go ahead and just kind of keep moving along here because again, I want to keep us on track as much as possible. As we take a look. At this, I wanted to throw in here, this is Tesla, just so you can kind of see this. So here you get your uptrend in place, and now you're looking for bars that are 45% or more off their highs, and then you're looking to go ahead and break above that level right there. So your entry is right above that high, and then your stop loss is one tick down below the low here. Okay, so that's how we're looking at this. Here's more example. That was a weekly chart of Tesla, and then during that, shortly after that same time frame, you can see on the daily charts how many of these different bars actually fired off on Tesla on a daily basis. Can you see all of them? So what happens is even if you miss one entry on a trade, usually more entries will come about. In fact, let's take a look here back to that Apple example here. Even after the initial Apple example over here, we actually had a couple of great ones down below here as well. Okay, and so it's one of those where if you miss the first one because you have a second career, you're busy, back and forth, family obligations, whatever, something happens, distracts you from a trade, all that's required usually is patience, because if you're in a decent downtrend, it's just a matter of time before you get another one of those opportunities. Does that make sense to everybody? Something I really try to encourage people to think about, because sometimes people get in the habit of oh no, I missed the trade, I got to jump in right away, and they find themselves, without waiting for a fresh setup, and they find themselves having the market reverse on them. They buy the highs, they sell the lows, and of course bad things happen in that situation. So let's look at a couple of examples I took from the trading competition here last year in Paris, France. So these are live examples of what I actually did. You'll see here we are 45, 50% off the low. Okay, and so then I went ahead and shorted right below the low there, and you can see these are 2-minute bars, by the way. These are 2-minute bars, so that we're focusing on intraday because, of course, each round of the competition is only 90 minutes long, so I naturally couldn't be focusing on hour-long and swing trade type positions because you had to close out your profits to win before each of the rounds was over. So you can see here, we had that bar, and then I took the trade one tick below the low. You'll notice that over the next 8 minutes here, this thing dropped like a stone, dropped over 60 ticks basically in the coming 8 minutes or so. That's about $600 per contract. Okay, not too shabby. As we go and we look at some additional trades here, so this was gold again. Now this was nice because you remember I had those judges that are in my ear basically asking, are you trading, trade? So what was nice is here we had a situation where the market was coming down. We have the 45% or more off the low. Well, then it started going back up for about the next 18 minutes. Well, so I was able to put the order in down below long before he. I basically tell him, hey, I'm getting ready to trade. And then once it broke down below, notice what it did. It really accelerated to the downside, didn't it? So you can see here, it pushed back through here, broke down below the low, okay, and then really accelerated to the downside. So really great stuff as you look at this. And again, these are actual competition winning examples, you know, that I did with this. Now, so in other words, what we're doing, we see the signal bar, and then we're going out into the future, and as long as it breaks down below within the next 20 bars, so if it's a 2-minute chart, that's the next 40 minutes. If it's an hourly chart, that's the next 20 hours. As long as it breaks down through there within the next 20 bars, I'm usually looking to take that trade. Okay, depending on the time frame that I'm trading on. Now, what happened from there was we went ahead and actually then had another. So this whooshed down. I actually trailed it down, took my profit on it, and then we had another signal pop in right after that. So I went short again over here, and then it dropped again. Okay, so you know, so I actually had 2 trades back to back there over the course of you know, a handful of minutes. So then here's another example. This was crude oil. Crude oil here. We look to go 1 tick below the low of that bar. That's 45% or more off the low. And notice once again, once that area where the market was stopped and rejected, it came back down in the direction of the trend. Once we broke through, look what it did. Whoosh, you know, pile drive right through there. Okay, is everybody seeing the theme with that? See how that works? I'll just make sure I look at the questions box there real quick. So what we're doing is we're identifying this. We're trailing the trades. We're and you know, trailing the profits down. Use that methodology that I showed you just a little bit ago. Let's see. Well, Michael, so Michael says, does this work better with some stocks than others? I usually like the high flyers personally, so the Teslas, the Apples, different things like that. It's a little bit more boring to go ahead and do it on like an undiscovered, you know, stock that's kind of sitting there at $6. Okay, so. You know what I'm saying? So I usually like to have the markets that move a little bit more, have a little bit more volatility, average true range, stuff like that. It's kind of like this. Here's a great example of it too, like on an intraday basis for all of you. What I prefer to do is the U.S. stock indices. I don't trade the U.S. stock index futures at like 2 o'clock, 3 o'clock, 4 o'clock in the morning. The ranges are just kind of slow and tight. In fact, they actually kind of look like this chart here, you know, right through here, right? Really kind of tight and sloppy and stuff like that. But then in the middle of the U.S. session, then they're more exciting. So during the European session, I tend to trade more gold, crude oil, DAX, things of that nature. So same kind of concept. I don't like things that are just kind of slow and just kind of hanging in there. I like to have range and motion, okay? So as we go ahead and the trailing method, we actually showed the trailing method just a few minutes ago. Sorry, maybe if you joined in late or so, or got bumped off earlier, or whatever the case may be. So we're back at it here. So one other thing to think about too: how can you use this with your favorite options strategy? So if you see us breaking down below here, but you don't want to trade or can't afford to trade the underlying instrument, but you're betting this market's going to go down because we've broken down below there. Is there anything you can do with this from a trading perspective for options? What do you think? Is there a way to bet directionally that this is going to go down and or not go up? Absolutely. The most traditional way for the trader, a very conventional way, would be to buy a put, right? sell a call, buy a put, depending which style you like to do, right? Put a credit spread on. So what you can do is, especially when you're looking at daily or weekly charts, it's a way for you to identify if you've identified the direction you expect this to go with this strategy, breaking through these key accumulation areas you expect to continue there. Well, then you're either betting directionally with your put, in this case buying the put, that it's going to go there, or you're selling a call betting that it's not going to get back up here, depending on what your risk parameters are. Okay, that chart, that moving average is a black 20-period exponential moving average, Fernando. Okay, I want to keep it real simple for you guys today and just focus on the black 20-period exponential moving average and this concept of these bars that are 45% or more off their lows. All right, so. This trade can be seen over and over again. I actually taught this in Barcelona, Spain here recently after the Paris, France win. You'll notice right there, you see it. Can everybody see that bar there, 45% or more off the low? Let me erase that and then put that back in here. If you look right over here, gang, on this bar, it's 45% off the low. What did it do? So I taught this class on this strategy. I went back, I taught it in the morning. I went back to my live trading room, took this trade, and then came back there that afternoon, and then we talked about that trade in the next class in Barcelona. I was supposed to do one speaking session, but after winning the trading competition in France, they actually had me do 4 trading sessions. So I went ahead and we were kind of back and forth between my live trading room and the classes. So what happened was, you see, we pushed down below the low of that bar, and what did it do? Notice that after it got down below that low of that bar, what did it do, gang? It whooshed to the downside, dropped dramatically, didn't it? Okay, dropped about 40 ticks right there afterwards over the next just couple of minutes. So really possible, and I did one contract with that and got 25 of those ticks. So, so I hope it kind of puts in perspective that we teach it, but I'm trading it as well. All right, so just more examples of me taking these trades, and again, this was one of those trading strategies that actually helped me again this year, because again, go back to September 19th and look at that market, how that market continued to go down throughout the day. And so I had 2 key strategies that I was focusing on. This was one of them during that process, and that really helped me with the $3,200 of gross profit in the U.S. stock index futures during that competition. So last year it was almost all the trades I took during the event. This year it wasn't nearly as many of the trades, but it was an important part of the process that helped me win that competition this year. So gang, I hope you guys learned something really important here. I'm going to try to stop right at the time where the next speaker is supposed to come on, even though we started a little bit later. I hope you guys learned something really important here, because this is real world trading strategies that I'm using in my live trading room, that I'm using in domestic and international national trading competitions around the world, and I show this to people, and the people that go out and practice it, really come back, tell me great things, and then those that don't practice it, hopefully eventually start to after I've won enough competitions or tested it for a while and everything else. So it's really awesome. Yeah, thank you very much. That's really nice of you. And Jeff and company, see a lot of really nice comments there. So a lot of great people. Appreciate your patience with the troubles that we had earlier, and I really appreciate you guys being here with me. Like I said, have nothing to sell you today. Most of you guys can just, there might be something that they can give you to get access to my live trading room. I think they had something for you there. Maybe they give you the link, but I'm going to just leave you with the quality information that I'm using in very real world trading around the world. Okay? Thank you so very much. Yep. You're very, very, very welcome. Very nice of all of you. So with that, I'm going to go ahead and bid you adieu. I'm going to pack up and head out of London and head back to the United States. Thanks so much, everybody. Take care, everyone. Jeff and company, thanks for having me here, and over to you guys. Tried to work through all the technical difficulties and hope that worked out okay.
All right. No, great, Rob. Really appreciate your coming in here. Sorry we had some problems initially getting started, but as always, a true thing. Now, I will say I don't have the link right here for the free trading room, although if you opted in, you will be receiving it from Rob. If you didn't, you can go back up, because I'm not going to pull the lists right away. You can go back up and re-register to receive Rob's free room access, or whatever the bonus was, so we'll make sure you get